Welcome, tech aficionados, to the Thursday edition of Tech Stocks Daily. Today we're diving into a roller coaster of updates that'll have your head spinning. First up, uncover the dramatic financial drama as Symbotic faces a revenue recognition scandal, while also making moves with a strategic OhmniLabs acquisition. Next on deck, Microsoft shaking things up with a recruiting coup in AI healthcare and a swirl of intriguing options trading. Over in digital realms, Hut 8 Corp's blockchain buzz is tickling investors' fancy with explosive activity. And finally, Meta finds itself at a crossroads of mixed market sentiments amidst robust sector performance. Buckle up as we unravel these tales of triumphs and trials. All right, folks, buckle up, because today we've got a fascinating saga playing out in the world of robotics and automation with a twist of financial drama. We're diving deep into the hullabaloo surrounding Symbotic Inc., which is stirring up a storm in the tech news realm today for a mix of compelling reasons. First off, we've got the juicy, drama-filled updates from the legal department. Symbotic has found itself in some hot water as it faces a securities class action lawsuit. The lawsuit alleges that Symbotic made some questionable decisions involving their revenue recognition practices. It seems that from February to November this year, the company might have been a bit too optimistic, or dare we say creative, in how it booked some of its revenue. They allegedly overstated systems revenue and profits while downplaying their losses, which is the kind of accounting magic trick that the Securities Exchange Act frowns upon. As a result of these revelations, Symbotic's stock took a nosedive, plummeting a dramatic 36% in just a ribbon-cutting worthy clambake of financial turmoil. To roll with the punches, our headline-grabbing firm had to restate their financial results for 3 quarters of this year. Instead of the financial sunny skies they initially reported, those quarters were a bit more Seattle winter than California summer. This restatement led Hagens Berman, a shareholder rights firm, to open an investigation into whether this accounting fiasco was just a faulty compass or outright gross negligence. All right, while that's the monetary mayhem, let's swing by the tech gateway, because it's not all doom and gloom for Symbotic. On a considerably brighter note, the company proudly announced its acquisition of OhmniLabs. In robotic circles, this is akin to Sherlock teaming up with Watson. OhmniLabs from Silicon Valley is renowned for their robotic solutions in healthcare, with everything from telepresence robots that make you feel like you've beamed up to disinfecting robots, stringently eradicating germs more effectively than preschool staff sanitizing every toy. This acquisition is kind of like adding a bazooka to Symbotic's already formidable Swiss Army knife of AI-powered automation expertise. The strategic ploy is seen as a way to expand Symbotic's influence beyond the warehouse and establish a foothold in the healthcare sector, an industry that is ripe for automation innovation. This move could indeed act as a propeller for Symbotic's ambitions in utilizing robotics to redefine healthcare efficiencies and redefine contemporary commerce logistics. In foreseeing the impact of today's headlines, Symbotic stock has been one to watch, with analysts adjusting their earnings expectations. Despite the bumpy financial awakening with their restated earnings and legal quagmire, there's a path lined with opportunity lights, thanks to their new collaboration. A firm hand on the wheel might still steer the good ship Symbotic to smoother seas. Keep your peepers open for how these microparticles in the tech ocean interplay over time. There we have it, folks. A whirlwind day for Symbotic. We've got financial hurdles on one end and strategic market expanding moves on the other. Whether they'll gracefully pirouette through these challenges or take a tumble, only time will tell. Welcome to today's Tech News Breakdown, focusing all on Microsoft. First up, we've got some juicy analysis courtesy of Benzinga, diving deep into Microsoft's standing among its software industry peers. The in-depth comparison shines a light on Microsoft's financial metrics. While the price-to-earnings and price-to-book ratios suggest the stock might be undervalued, a higher price-to-sales ratio hints at a potential overvaluation when looking at revenues alone. But let's sprinkle some profitability magic here. Microsoft boasts towering EBITDA and gross profit figures compared to its competition. And even if the return on equity seems to nap below the industry average, Microsoft's robust cash flow and revenue growth, alongside a healthier debt-to-equity ratio, scream financial fortitude. Next, let's wobble over to the world of unusual stock market capers. Microsoft hit the spotlight again due to some sharp-eyed observers noting unusual options activity. Financial giants cast a bearish spell on Microsoft, with a mix of 30 unusual trades caught in the act. Only 33% of these trades seemed bullish compared to a whopping 46% that flexed their bearish muscles. Sneaking into the details, we find most of these were in the form of calls, while a couple of trades were puts. This whale activity targeted a charming price range of $445 to $465. For anyone surfing the wild options wave, this serves as a crucial map to the treasure of interest and liquidity swirling around Microsoft's options market. Buckle up, because Microsoft isn't just dominating the software realm, it's also venturing mighty strides into the AI frontier. More precisely, healthcare. The latest buzz is all about Microsoft's recruitment frenzy, snagging talent from Google's DeepMind. With Mustafa Suleyman, one of DeepMind's co-founders, now captain of Microsoft's AI ship, they're assembling a top-notch team for their new AI health division. This maneuver is part of a grand vision to exploit generative AI for healthcare innovations. Fancy titles aside, the aim is solid: revolutionizing how consumers access health information via generative AI. This ain't just tech innovation, it's health tech revolution. Why does this matter? Well, with over half of surveyed US adults banking on generative AI-inspired improvements in healthcare accessibility, and nearly half tinkering with chatbots for health advice, Microsoft is parked right at the intersection of tech wizardry and essential healthcare solutions. That wraps up why Microsoft is the belle of today's tech news ball, shining in financial comparisons, stirring the pot in options trading, and raising its banner high in AI healthcare innovations. Whether it's outshining competitors or redefining an industry, Microsoft is planting flags across new horizons, making today's tech updates an epic tale of strategy, innovation, and ambition. Stay tuned for more as Microsoft continues its bold ventures. And there you have it, everything Microsoft and tech that's trending under the sun today. Hey tech enthusiasts, today we've got the spotlight on Hut 8 Corp, a company making waves in the digital asset sphere and shaking things up like a caffeinated squirrel at a nut convention. Let's dive into why Hut 8 is catching everyone's eye today. First up, a bevy of big money investors are peering into the future of Hut 8 with a keen eye on options trading. According to the Benzinga options scanner, an unusual level of activity with 21 eye-popping options trades caught the market's attention today. You know it's serious when these whales start doing the market cha-cha. While the mystery moguls behind these moves remain anonymous, the stakes are laid out bare, close to 109K in puts and a whopping $745K in calls complementing each other like peanut butter and jelly. What's cooking here, you ask? Well, it appears these financial bigwigs predict a price window of $20 to $45 for Hut 8. They are getting all the sci-fi nerd eager as if there's a new Star Wars movie dropping. The mood? Split like a banana. The options warriors are divided, with 52% waving the bullish flag while 28% mutter, maybe not, under their breath. Hut 8 is primarily in the business of making magic out of numbers. Visualize solving digital riddles on the Bitcoin blockchain for mean word puzzles rewards. They dabble in the digital assets mining realm with honorable mentions in managed services, high-performance computing, and cloud services. Basically, they're kind of a techie jack of all trades. Analysts are sticking to mostly thumbs-up ratings on this stock like it's golden popcorn at a movie awards show. A slight bearish cloud wafts from Jones Trading, but Benchmark and several others are all firmly on board the buy train, with an average target station at 32.8. Analysts are all buy, like the Backstreet Boys in the 90s. So, why now specifically? Well, Hut 8 just hatched over its 20-day moving average, sparking investors' imaginations. When a stock skips past its 20-day average, traders often take this to mean, hey there, short-term growth prospects coming through. Kind of like noticing your houseplant sprouting an extra leaf or your Pokemon evolving to the next level. In the last month, the company's stock climbed 7.7%, and they got a shiny Zacks ranked number 2, gold star-worthy stuff. What's tighter than spandex in a cycle class? The fiscal positioning of Hut 8, that's what. Earnings estimate revisions are up, no estimate cuts in the past 2 months, setting a picturesquely bullish precedent. Combine earnings revisions with the technical excitement, and you've got the right ingredients for potential gains. So whether you're cozy in futures, options trading, or kneecaps deep in company shareholding, Hut 8 is the tech fable to follow today. Keep those goggles on, folks, because there might be more up this stock's mining sleeve than just digital gold. All right, folks, gather around because it's time to dive into why Meta Platforms, aka the Sultan of social media, was stealing headlines today. First up, there was an unusual frenzy in the options trading galaxy surrounding Meta, ringing more bells than a Black Friday sale. It's basically when big spenders or institutional investors start wading knee-deep in options contracts, trying to signal what they believe about the company's future. Today, we saw a whopping 23 uncommon options trades on Meta. The mood amongst these financial wizards? A mixed bag. We've got 30% bullish vibes versus 52% feeling bearish. Sounds like some of these investors are concerned that things might be heading south, but others seem to still believe Meta's got some mojo left. For context, these options ranged with price targets from a cool $310 up to an "is this even real?" $800. It's like predicting if today's AI-powered lattes will be the next staple of our digital diet, or if they'll barely make it to the clearance shelf. Some insiders believe this activity foreshadows potential shakeups or golden opportunities for Meta. Let me know if you enjoy a bit of risk and speculation, or if you prefer keeping your stocks steady and chill. And then, of course, we've got Meta compared to its peers in the interactive media and services sector. Kind of like comparing your juggling skills in high school to the dude who's performing on America's Got Talent. Meta's rocking a price-to-earnings ratio that suggests it's underpriced against the industry average, potentially making it a sweet deal if you're shopping for stocks. But heads up, when it comes to price-to-book and price-to-sales ratios, Meta's clocking in rather high, suggesting the market thinks Meta's assets and sales are top-notch. Or maybe it hints that people are hanging on to proverbial rose-tinted spectacles. But don't fret if this seems like a numbers game, because when we peek at performance, return on equity, EBITDA, gross profit, and revenue growth, it's clear Meta's getting brawny superstar athlete vibes. It's punching way above the industry averages, suggesting it knows how to flex its corporate muscles. Plus, let's give props where props are due. They keep debt to equity low, positioning themselves less like the friend that's always borrowing cash and more like the one who's ready for whatever. Every savvy investor has their own take on such market news. So what's yours? Does Meta's high-flying family of apps thrill you, or are you keeping a careful eye on their Reality Labs passions? Let's get that comment section buzzing with all your brilliant thoughts and hot takes. Are you bullish, bearish, or perhaps an owl observing from a tree? Drop your insights below. All right, tech enthusiasts, for today's stock deep dive, I'm going to put the spotlight on Microsoft and give my 2 cents on whether you should buy, sell, or hold it, given today's news frenzy. Grab your earbuds, let's break it down. So Microsoft is flexing its muscles with some intriguing financial gymnastics, showing off solid profitability metrics despite a higher price-to-sales ratio. It seems they're playing the strong game, even if some segments suggest overvaluation. Combine that with its recent magnetic move into the AI healthcare domain by recruiting DeepMind talent, and Microsoft is clearly trotting out some big vision tech dreams. Now, sprinkle in that unusual options activity, where big players are playing a mysterious trading tango, and we've got all our interest piqued. With financial titans mostly acting on bearish sentiments, there may be some market skeptics expecting turbulence ahead. Here's my take. Hold on to your digital horses for Microsoft. Why? Because while there's a dance of caution in the options timber, Microsoft's hefty strides in AI, coupled with their robust financial standing, paint a daring growth journey. It's walking the tightrope between innovation and market concern, but the future it's teasing, especially in healthcare, bears watching. But remember, pals, this is just one wild tech jockey's opinion skimming the news froth. Always do your own research. Dig into the corporate tea leaves and chat with your financial advisor, because the tech world is as changeable as cat memes in a viral storm. Whether you fly with the dividends, dance with the options, or chip away in Bitcoin, make sure it fits your style, risk appetite, and investment goals. What are your thoughts? Are you holding tight, diving in, or strolling away? Let the debate light up the thread below. Today was a roller coaster ride through the tech world, with Symbotic facing a financial soap opera of accounting woes, yet still snagging a promising robotics acquisition. Microsoft dazzled with strong financials, a recruiting power play in AI healthcare, and a mysterious undertone in options trading. Over in the land of digital gold, Hut 8 flexed its blockchain prowess, climbing past its averages while tickling investors' imaginations. Finally, Meta juggled mixed investor sentiments alongside shining profitability metrics against its sector. As we wrap up, make sure to smash that like button, subscribe for more tech tidbits, and share this video with your fellow tech enthusiasts. And don't forget to swing by tomorrow for another quick dip into the tech universe.